I see a couple more people joining. We'll get started in just a second. All right, well, good afternoon, everybody. My name is Elizabeth Foster, and I'm the Director of Philanthropy here in the South Carolina chapter of the Nature Conservancy. And we just want to welcome all of you from near and far joining us today. I do know we have some people from outside of South Carolina, which is great. And just a big thank you to all of you who support the work that we are doing on the behalf of the planet every day. Today, we're really excited to have two experts joining us to talk about year-end giving, the CARES Act, and other tax-related giving information. But before we move on to that, I just wanted to share a couple of housekeeping items. First, you can click on Speaker View at the top right of your screen, and that will just allow you to see only the speaker and not be distracted. We'll have a few poll questions along the way. They're not required, but we'd love for you to participate so we can get a better idea of our audience. And then last, if you have a question at any point, just type it into the chat option at the bottom of your screen, and we will try to get to everybody's. So let's move on with our program. I'd like to introduce my two colleagues, Ed Cadogan and Greg Sharkey today. Greg is a senior philanthropy advisor for the Nature Conservancy. He is a lawyer and a nationally recognized expert and past chair of the National Association of Charitable Gift Planners, which is a 6,000-member national organization of for-profit advisors and not-for-profit gift planners. And Ed Cadogan, who is in our gift planning department at our headquarters in Arlington, Virginia, and works with many of the states in the US on gift planning activities with donors. Ed is a seasoned plan giving professional who will share stories with us about donors he's worked with who have given non-cash assets, all the while balancing their financial needs. So looking forward to hear from him as well. So let's start off with a poll question. The first question is very simple. Have you ever made a gift of stock to a charity? Not required, but if you'd like to participate, that is fine. Just helps us know a little bit more about you. We'll let everybody do that quickly. All right, so it looks like about 25% have and 75% have not. So we've got some great information for those of you who may be interested in doing this but have not done it yet. So Greg, let's start with the stock market. What are you seeing right now? And if you can come off mute.
Thanks so much, Elizabeth. I'd be a rich man if I had a nickel for every time I was on mute when I thought I was unmuted. But great to be with everyone this afternoon. And it looks like, several of us have indeed used stock or mutual funds to make charitable gifts. And I would offer that this strategy, in a sense, has never been more compelling than this calendar year with the continued rise in the stock market, which in fact is setting new highs this very week. So the last 2 years have been record years for stock gifts to TNC and for many other charities. And just to give everyone a sense, in FY20, TNC received over $63 million in stock gifts from our donors, which was a new record at the time. But then FY21 came along, and by FY, we just mean fiscal year. That's the year that closed June 30th, 2021, about 4 months ago. And our donors at TNC smashed the prior high record by giving over $181 million in stock gifts to TNC, which is almost 3 times the prior record of just 1 year earlier. It's really quite astounding. And it's really a testament to the generosity of our donors at TNC. So how did this happen? Well, you know, even in the midst of the COVID pandemic, the US stock market had the longest bull market of its history from March 2009 to March 2020. And then COVID hit here in the US, and we had a very brief bear market. It was scary. It went down. The S&P went down about 34% in 1 month, but it came right back up over time. And in fact, the bull market has really been running strong again for the last 17 to 18 months. Just to give everyone a sense, and we probably see this when we look at our retirement plan balances and so forth, but the S&P 500 is up another 24% this calendar year. And it's up 35% from 1 year ago, November 4th, 2020. And similarly, the NASDAQ is up 22% this calendar year, and it's up 36% from last November. So many donors have at least some of their stocks and mutual funds with significant amounts of capital gain from this longest bull market in the history of the US. And these donors are using these highly appreciated assets to fund charitable gifts to TNC and to other charities for that matter. And they're doing this in record numbers. And, you know, I would point out that these savvy donors know that using appreciated assets to make charitable gifts is the very best way financially to support the charities they care for. And as long as donors itemize on their tax returns, and as long as they've owned the stock or mutual fund for more than a year, they get a very compelling double tax benefit for making gifts with stock or mutual funds. Very briefly, first, donors get a charitable income tax deduction for the full fair market value of the stock that they give on the date that they give it. Second, they avoid all the capital gain they have in that stock or mutual fund by giving it to charity. And we have an illustration that shows just how compelling this double tax benefit is, that was sent to everyone in an email yesterday from Elizabeth and her team in South Carolina. And the numbers can vary, but whatever numbers you use, this illustration just gives everyone an idea of just how compelling this double tax benefit is. It basically makes the cost of making a charitable gift a whole lot less for all of us who use stock to make gifts. And so bottom line, making charitable gifts of appreciated stock and mutual funds continues to be a very smart strategy for donors who are making charitable gifts to the causes they care for.
Thanks, Greg. That's really helpful information. And I just want to let all of you know, we'll send that fact sheet out after this presentation as well, in case you didn't get it, but it's got some real helpful information on it. So let's move to our next poll question, which is, have you ever made a gift of real estate to a charity? Now, I think this is probably a little unusual. Not a lot of people do this, and not a lot of people know they can do this. So let's see. All right, we have 88% have, 13% have not. All right, so we're going to move on and talk about how you can make gifts of real estate. And I think we all know that the Nature Conservancy holds land for conservation purposes. But many people don't know that we accept gifts of real estate that don't have conservation value. So Ed, can you tell us a little bit about the benefits of donating real estate to the Nature Conservancy or to another favorite charity?
Yeah, thank you, Elizabeth. Conservancy. I've had the privilege of working with individuals and financial advisors to talk about gifts of real estate. And there's a common theme among the individuals that I've worked with over the years. And, you know, whether you own family home or an undeveloped lot of land or commercial property, the one thing that I found that's common among all these different types of properties is that for these individuals, real estate that was held for more than 1 year. So this is long term investment.
Yeah, we're having a little trouble with your connection, I think.
Many of these properties that with hear me?
Why don't you try getting off your camera for a sec? See if that works better.
Can you hear me now?
Yes.
Okay. So the real estate that people own represented the largest assets. And what this means is that they could face a significant capital gains taxes if they sold their real estate. And donating the real estate to charity allows many people to leverage one of their most important investments to really achieve some great impact for nature. So what are the benefits? Number one, as Greg mentioned, with stock, appreciated stock, you potentially can eliminate the capital gain
And we're still having a little trouble.
tax that you would otherwise gifts out to. Oh, I'm sorry. You can increase your gift up to 20% by giving the real estate to. The other benefit is that you get a fair market value tax deduction for the full fair market value of your property. So those are the two benefits for donors. You know, these gifts are complex. They require advisors and tax analysis. As Elizabeth said, the Nature Conservancy makes these gifts easy. We have a team of experts who can evaluate and receive and process and liquidate real estate gifts.
We can come back at the end and maybe just confirm those two things you just mentioned, because I know you were kind of coming in and out, but we'll come back to that because those were two important points. One thing I would just like to add is that this is just a great way for people who might have bought an apartment for a college student, or no longer be using a family vacation home, or you know, just trying to meet their philanthropic and personal goals at the same time. Some people will do a half gift and half sale. There are all different ways to slice and dice it, but it's just an interesting way to think about supporting your favorite charity and also meeting your financial needs. So we have a quick video, and one of our guests today is Bill Lowry. Glad to see you, Bill. Thanks for joining us. Bill is a trustee emeritus with the South Carolina chapter, and he is a real estate donor. He gave a gift of a mountain house to the South Carolina chapter a couple of years ago. This is just a great example of something that he was really no longer using or needing. and decided to use it to kind of fulfill his philanthropic goals. And we just have a quick video of him sharing a little information about that. So let's see if we can get that video started.
Well, philanthropy is important to my family because it's a major part of the culture of our country. And if it weren't for that, there's a lot of really good organizations that wouldn't look like they look like today. They rely heavily on donations from their friends. And then the Nature Conservancy is one of those. I had given a lot of thought to what our campaign gift would be, but I hadn't totally decided how it would be made. The big impetus was Ed Cadogan and his expertise. One of the things he talked about was that the Conservancy has for many years accepted gifts of hard assets, be it land, buildings, and so forth. And that was an eye-opener to me because I had a house that I was looking to sell, a summer home that I was looking to sell. I thought maybe there's something to do here. I think the ease of doing it and the ease that the Conservancy makes for you to do this was very compelling. I mean, if you wanted to walk out of the house and hand your keys to the Conservancy, they'd take care of everything. The second part of it was a gift that we set up in a charitable lead annuity trust, and it will pay out the pledge over 5 years. And then if there's any, and I hope there is, growth in the assets that I put into that, I can then transfer that growth to my granddaughters tax-free. The Conservancy is a first-class organization. It does what it says it's going to do, and they do a great job of stewarding the resources that are given to them, and a good job of keeping people informed as to what's going on and what's being accomplished with gifts that are made. They really are using it in a way that I really feel good about.
Thank you, Bill. Thank you again for that wonderful gift you made to us. Great example of a smart way to give and meet your own financial goals. Mm-hmm. So we're going to move on and talk about the CARES Act. And I know we've all been hearing about that during the pandemic for the past couple of years. And Greg, you've talked a lot about all the interesting ways that donors can make gifts of assets, but this year for a few donors, it may make more sense to give cash. So can you tell us a little bit more about that as it relates to the CARES Act, and maybe remind us all what CARES stands for?
Sure, it's my pleasure. So the CARES Act was passed by Congress in March 2020 in direct response to the COVID-19 pandemic. And it contains lots of different provisions, but it contains a few key provisions related to charitable giving. And specifically, it contains a provision that is potentially helpful to some donors who itemize deductions on their tax returns. Specifically, the CARES Act allows donors who make cash gifts, it has to be a cash gift, to certain charitable organizations like TNC to deduct up to 100% of the donor's AGI, adjusted gross income, in the year of the gift. And the CARES Act was extended in late 2020 to apply in 2021, this year as well. It is set to expire December 31st this year, and there's been no discussion this time around about extending it. So it's kind of a time-limited opportunity. Now, what this really means is in normal years, donors who itemize their deductions are limited to deducting amounts for their charitable gifts of up to 60% of their AGI for cash gifts and 30% for gifts of assets like stock and real estate. So the bottom line is there's a relatively narrow band of donors who, depending on their unique financial circumstances this year, may actually benefit from making cash gifts in 2021. And we shared a fact sheet that discusses this. Again, we all received it from Elizabeth and the team yesterday, and I think they'll probably share it again with all of us after the call. And what I would basically encourage is for, donors on the call today who do itemize your deductions to perhaps talk with your advisors to see if this might make sense for you before year end. The fact sheet suggests 3 specific scenarios where this may make sense for donors. At the same time, I want to caution that most donors who do itemize their deductions are still going to reap more tax benefits by giving appreciated assets. Because remember, when we give appreciated assets, we get that double tax benefit that I discussed at the start of the call. But there are some donors, a minority of donors, who maybe should consider giving cash in 2021 because of this special law of the CARES Act. And it's really important to for us to do the math with our advisors to see if it really makes sense, because it's highly dependent upon our own unique financial situation. So that's the CARES Act for itemizers. I want to briefly mention that for those of us who don't itemize our deductions on our taxes, there's also a little treat in the CARES Act for us. And this really applies to the vast majority of the US population, because you might remember the standard deduction was dramatically increased. It was doubled in the Tax Act of 2017. So there are only a very small percentage of US taxpayers who still itemize. So for the vast majority of us who don't itemize or don't itemize in most years, these donors can take an above the line charitable deduction for cash gifts. Again, it's only cash gifts to charities like TNC of up to $300 per individual and $600 for married couples this year only in 2021. In 2022, we'll return to a situation where there are really no income tax benefits to non-itemizers who make charitable gifts. But this year, all of us who do not itemize deductions on our tax returns do get a little treat in the CARES Act that allows us to take a relatively small, but still significant, above the line charitable deduction, even though we don't itemize on our taxes.
Great. We did have a quick question in the chat about what is AGI, and that is adjusted gross income. If that
Right.
helps.
Yep. Thank you.
Okay. And if you have questions, just type them in the chat. We'll get to them at the end. Thanks for that, Greg. That's really helpful. I know there are a lot of questions about the CARES Act these days. So we're going to move on to our next poll question. And this has to do with qualified charitable distributions. And at what age can you begin to take those? So let's see. So the answer is 70.5. So that is good to know. It's a little bit younger than some people think. And we're going to have Ed tell us a little more about that. This is, again, another way to meet your philanthropic and personal financial goals when it comes to your qualified charitable distributions. So Ed, can you tell us the details of that?
Sure. I received a call from a donor a few months ago who thought that she was too young to make a qualified charitable distribution from her IRA, She was 70 and a half years old, but she thought that she had to be 72 to make a qualified charitable distribution. And there was some confusion, even talking with her financial advisor, who was thinking it was 72 years old. 72 is the age where you have to start taking a required minimum distribution. So this required minimum distribution increased from 70 and a half to 72. The IRS didn't change the age where you can make a gift directly to charity. It's still at 70 and a half years old. And this is a big benefit for many of our donors. If you're 70 and a half, you can make an outright gift directly to the South Carolina chapter. It can't go into a donor advised fund. It can't go to a private family foundation. It has to go directly to the charity, up to $100,000. So you can make a gift of $10,000 a year. And what we're seeing, Elizabeth, is many donors are using this asset, the IRA, to make outright gifts that have an immediate impact on our conservation work.
Yeah, we get a lot of those, and it's a great way to make a gift and also take advantage of those benefits. And I'd also like to add that it's a great way to make a bequest gift. So in your will, you could include your IRA or a portion of it, and it's just another easy way to leave an asset to one of your favorite charities. So let's move on to the two infrastructure bills that are currently working their way through Congress. Greg, tell us a little bit about that. Are they likely to affect charitable giving?
The short answer this week, and probably this is set for the foreseeable future, it's now clear that the two infrastructure bills that are currently being discussed and finalized in Congress are not going to affect individual income and capital gains tax rates, and therefore are really not going to directly affect philanthropy. Earlier in the process, it looked like there was a decent chance that for high net worth taxpayers making in excess of $400,000 a year, single, or $450,000 married filing jointly, we're going to see their income taxes increased and see their capital gains taxes increased to pay for the cost of these two new pieces of legislation. But it's now clear that that's not the case. These bills are going to be paid for through other means, largely through some corporate taxes. So charitable giving is really not going to be impacted directly by either of these bills. Now, in 2022, next year, it's still possible that perhaps we could see Congress revisit raising those income tax rates, the capital gains tax rates. But right now, the Democrats do not have the votes to get this done. And it's not likely that they will have the votes until the midterm elections. And if there's some turnover there, who knows, maybe they'll have the votes. But for the time being, income tax rates for individuals and capital gains tax rates for individuals are going to stay exactly where they are.
Great, very helpful. So let's jump over to donor advised funds. I know that they're one of the fastest growing philanthropic ways of giving with donors these days. We read about that all the time. Can you tell us a little bit about donor advised funds and, the advantages and, when is a good time to do that?
Sure. I really think the continued rapid growth of the creation of and the use of donor advised funds, it's really the most significant trend affecting philanthropy. And I believe this has been the case for the last 4 to 5 years. What we're seeing is donors at all wealth levels are using these vehicles to help them accomplish their charitable goals. And donor advised funds allow donors to take an immediate charitable income tax deduction when they establish the fund or when they add gifts to their donor advised fund. But they give donors the gift of time to decide how and where to recommend the money that they put into the DAF be granted out to the charities that they care for. And donors often use appreciated assets to make gifts to their donor advised funds. And if they itemize, they receive the same type of double tax benefit in making gifts to their donor advised fund as if they had made the gift directly to a charity like TNC or their church or their university. And just to give everyone a sense of how significant donor advised funds have grown, there are now over $141 billion in assets in donor advised funds in this country. That is just an astounding number. And donor advised fund donors gave very generously from their donor advised funds throughout the COVID pandemic. Donors across the US really gave, studies have shown they gave substantially more from their donor advised funds in the last 18 months since COVID hit than they had made those gifts prior to COVID. And I've seen this in my own work with TNC donors across the nation who've actually have increased their giving significantly, not only to TNC, but to the other longstanding charitable causes they care for. They've increased that giving significantly in the last 18 months. And one of the many reasons we're seeing this is that a lot of DAF donors see their donor advised fund as kind of a rainy day fund. And, you know, there's been so much turmoil in the world the last 18 months. It's clear these donors are really stepping up and giving at very, very high levels. And I would just add a few more things, Elizabeth. In my experience, most donor advised fund donors love their donor advised funds. Now, donor advised funds are not for everyone, but one of the big reasons that they have become so popular is it simplifies the giving of donors, and it just makes giving easier. I personally have a donor advised fund at Fidelity Charitable, and it really does streamline and make my giving a lot easier. And this is what I hear over and over from the donors I work with throughout the country. And if we just think about this, you take the example of a generous donor who might like to make 7 or 8 stock gifts throughout the year to 7 or 8 of their favorite charities. And if they don't have a DAF, they have to go through the process of making those stock gifts to 7 or 8 different charities each year. Now, it's not incredibly tough, but there's a process, and it's kind of, you know, it takes some time. And with a donor advised fund, donors can make one larger gift to their donor advised fund each year. And then, so they make one gift, they get one tax acknowledgement, and then they simply recommend grants from that one large fund to their 7 or 8 charities. So it's just a lot simpler. And the other thing is that the money that donors give to fund their donors advised funds, it can grow tax-free, because once the money is in a donor advised fund and it's invested in stocks and bonds, it grows tax-free, which is in this kind of market is a huge benefit, with the market surging the way it is. So to sum up, for those who don't use donor advised funds, you may want to look at this as a potential option to make your charitable giving more enjoyable. And there are many fine donor advised fund host organizations throughout the US, and TNC also hosts a donor advised fund. And we, Ed and I and Elizabeth, we would be happy to talk with you about donor advised funds, just to help educate you, perhaps to see if this might make sense for you and to help you find the best fit for your needs. Because we talk with a lot of donors who are interested in a donor advised fund, but actually we determined TNC's fund is not the best fit. It might be a community foundation donor advised fund, or it might be a Fidelity Charitable's donor advised fund, because all the DAFs are a little bit different in terms of their rules. So we're really interested as advisors in helping all of you find the best fit for your donor advised fund. We know all of us on this call, we love TNC, we're supportive of TNC, and regardless of where we have our donor advised fund, TNC is going to be one of our charitable priorities, and TNC is going to benefit. So Ed and I and our team are really focused on helping donors find the best fit if they're interested in a new donor advised fund.
Great, very helpful. Okay, we're just going to jump back over to Ed briefly to summarize the real estate gifts. If we have trouble, we'll turn that over to Greg and let him summarize it. But Ed, I think you're back on track.
Yeah, so the two tax benefits that we've been talking about include the capital gains tax. When you give a highly appreciated real estate property to
Can we
the
maybe
Nature
get off your camera
Conservancy, you
again,
can-
Ed? Sorry. All right, how about we turn it over to you, Greg, just to summarize briefly.
Sure. And so what Ed was alluding to is that just like with stock, with highly appreciated real estate, you get the same type of double tax benefit with real estate that you do with stock, as long as you itemize and as long as you've held the property for more than 1 year. You get a really substantial charitable income tax deduction for the appraised value of the property that you give to charity. And depending on the form that you give the property, and if you give it outright to TNC, like many of our real estate gifts are, you get to avoid all the capital gain. If you give it in another form, like to a charitable trust, you get to defer a lot of that capital gain. We won't get into the weeds there, but there are, suffice to say, there are income tax benefits and capital gain tax benefits. Again, very compelling benefits for gifts of real estate.
Great, thanks so much. So that wraps up our program, but we do have some time for questions, and we've had a few that came in advance, and I'm just gonna run through those real quickly. And if you'd like to type something in the chat, please feel free to do that. So the first one is, how do I know what organizations get the biggest use of each dollar I give them? So I think I'm going to turn that over to y'all. I think we can answer on behalf of TNC, certainly. So who's going to take that one?
I can try if
Okay.
I can talk. I'm just thinking about one of the largest gifts that the South Carolina chapter received. It's been a few years ago, but we were the recipient of a $17 million bequest from Miss Sally Reard. And what the South Carolina Board of Trustees and the leadership, they were able to leverage that $17 million gift 3 times or more. So I would say that you need to talk to the organizations that you give, and you want to ask about impact. What is the impact of the gifts that I'm going to make? There are a lot of charitable watch groups that can say that, you know, my dollar, you know, the charity spends 60 cents on the dollar. But what's important is impact. What is the charity doing? And for the South Carolina chapter, I know it's results that you can walk on, and they're very real.
Thanks, Ed. The next question is just simply, what is the process to make a stock gift? And I can answer that briefly. you can contact me here in the South Carolina chapter, and it's simply the contact information I would give you along with our tax ID number. And then you would let us know what type of stock it is and when we should expect it. And that is, it's really as simple as that. So you've got my contact information right there. It's a very simple process. So that is the stock information. Another question that came in, how long does it take to make a typical real estate transaction or a real estate gift? Ed, can you take that one?
Yeah, typically 12 weeks. I mean, that's just starting the due diligence process that the Nature Conservancy has to undertake to look at a property. 15-week average. I mean, during COVID, it was a little bit longer. I would say once we have the real estate, we've been putting and listing properties on the market, and they've been sold in 2 weeks. I mean, the real estate market is very hot today. So donors are giving the Nature Conservancy and Bill Lowry's gift, for example, they're giving high quality real estate to the Nature Conservancy. And that's really important. When you look at giving real estate to charities, the properties have to be marketable. And as the case with Bill's property, I mean, it was just a beautiful piece of a home, this vacation home that we were able to sell, and we were very successful.
Thanks. We have a question that just came in. What does TNC invest in when I'm giving money and then getting back a monthly amount?
Sure. So great question. And our donors who establish something like a charitable trust or a gift annuity, those assets are typically invested in a mix of stocks and bonds. We have two providers, for instance, for charitable trust, Caspic and Company and State Street Bank. They have highly diversified portfolios, a lot of mutual funds, and they're invested in those mix of stocks and bonds. There are also now ESG components to the portfolio. So donors can say, you know, I really would like my trust invested in companies that have high ESG marks, that's environmental, social, and governance marks. This is a huge growing trend in the investment industry, and we want our donors, our trust donors, to have access to those types of investments. So donors have a choice, some choice in terms of how they'd like those funds invested. And again, now TNC is proud to offer some ESG options in our life income gift portfolio, investment portfolios.
Great. And I've got one other question that came in. It's about entrepreneurs who've recently sold their business. What should they do to maximize their philanthropic options? That's a pretty big question, I know, but maybe you can just kind of give a general answer.
Sure. I think that, and I'm working with two entrepreneurs right now who've recently sold their businesses, one here in the Philadelphia area and another one in New Jersey. And what they are doing, both of them are relatively new to big time philanthropy. They're very generous people, but they're suddenly they have more wealth and more philanthropic capacity than they've ever had. And so they are, in the short term, both of them have actually said, look, I need tax relief this year. I sold my business. And so what they've done, and they looked at private foundations, which can be a great solution, and donor advised funds. And these two both went with donor advised funds for, a number of reasons. But some donors, establish a private foundation. But the benefit of whether you go with a private foundation or a donor advised fund is they're getting the tax relief now this year when they need it, the year they sold their business. And so they're getting the immediate tax relief, the immediate benefits of big tax deduction, avoid the capital gain in the assets being given. And they're getting that gift of time to figure out, okay, how do we want to give all these assets away? And I'm working with them on both technical and non-technical issues. I'm working with both these families on philanthropy mission statements. So we're gathering the kids together with mom and dad, and we're helping them focus on the things that are nearest and dearest to them, and then crafting a mission statement about that. This is what we want to do with our financial resources and our time. And once we get that mission statement in place, we'll then develop kind of a more detailed giving plan.
Great, that's really helpful. Well, I don't think we have any other questions at this point, and so we're just wrapping up around at 45 minutes, which I think is great, and we'll let you all get on with your evening. But thank you again, Ed and Greg, so much for your expertise. And we've got contact information right here on the screen, so please don't hesitate to contact us if you have other questions or if there's anything we can do for you. And thank you all for being here and for your support of the Nature Conservancy. Have a great evening.
Thanks.